Hello and welcome to this edition of Africa This Week, your wrap of what happened across the continent. I'm Mashudu Masutam. In this part of the program, we review the inauguration of the South African Black Business Council, as well as the property sector in Mauritius. South Africa's Black Business Council has inaugurated its executive. The organization was revived after a failed combination with the previously whites-only Business South Africa. The event was attended by several government ministers.
The launch of the Black Business Council is just the beginning of the realization of a dream. Because having been in construction in the industry for 16 years, I can tell you we need a platform like this to espouse the aspirations of the people, the practitioners in the industry, both from the professional side, from the contractor side. So it's exciting that finally we've got a platform. The empowerment policies are there, the budgets are there. We heard all the ministers talking about the budgets. Up to now, there's been a problem with accessing those opportunities, and the support that our government has stated has not been forthcoming because they've not had a proper platform through which to negotiate with us as business people. You heard our president is saying in his first 90 days, what he's going to do is to ensure that he goes back to the ministers. He says, Minister A, show me your budget. Where are your areas of focus? And then come back to the members and to say, these are the opportunities. So that's what excites me.
Still on the inauguration of the Black Business Council, the new executive committee pledged to keep doors open to all business in South Africa and beyond.
We're going to apply as the BBC to the relevant structures like your network, because we've got, I think, 99% of the black association in our folds. So it's a big voice of all professionals, big corporates, and you could see today everybody was there.
If we are approached, we will sit as the committee executive and consider what approaches do we have. But we're not closing doors. But as of now, we've decided to forge ahead, not necessarily wanting to compete, but to claim our space. We're not in competition with anybody. We think we deserve a space, and that's the space we are occupying.
Our president here has been inundated with requests for membership of BBC, even from organizations that one may term traditional white organizations. And he has presented a request to the executive committee to say, here are these requests. Some of them arrive from outside of the country, from Zimbabwe, from Nigeria. Eminent business people saying they want their organizations to become corporate members of BBC.
Mauritius remains a very popular holiday destination for thousands of South Africans, and tourism plays an important part in the island's overall economy that has been growing at an average of 5% per year over the last 10 years. Murray Adair, CEO of the Indian Ocean Real Estate Company, explained.
The market in Mauritius has traditionally been very Western focused, and gradually the market's now turning its head to maintain a presence in the Western Hemisphere but also look towards the East. So for the IRS programs and specifically Azuri, the project that we run, we've been working very hard to develop a market in Africa and Europe, but also to bring in new market from Asia.
Yeah. The IRS, as you alluded to, what is interesting about this is that it offers the potential buyers to become a Mauritian resident. Is this starting to actually gain traction where you see investors coming in and really being interested in the real estate and the property sector within Mauritius?
Yeah, absolutely. I think that the market had been very quiet for certainly 2008 through 2011, but for property and for overseas investment into Mauritius, we're seeing very strong traction now. I think the market is very value focused, and particularly with our project where we're selling IRS residences which grant residency rights in Mauritius from 4 million rand to around 6.5 million rand, there appears to be a strong market. And certainly Azuri is the fastest selling property development in Mauritius. We've turned over about 160 units, about 50 million of stock dollars in the last 4 months.
So Murray, it sounds like a really good deal because the minimum investment is 4 million rand. You also get to be a Mauritian resident. Of course, there's a very fine balance with ensuring that you do open up your doors and borders for foreign investment. But of course, you also need to ensure that the locals benefit extensively from this influx of foreigners. How does one strike the balance?
Well, certainly, and again at our project at Azuri, it's the first village, and it's a village we're creating, a new community. It's the first place in Mauritius where both foreigners and locals can buy in the same community. And the benefits to Mauritius are multiple, but one of the key ones that we're bringing through Azuri is the development of a new elite school. This is a school for 950 children, and it's one of the things as a property developer you have to look to nowadays. You can't just do golf courses, you just can't do marinas all the time. You have to look at new and innovative ways to create developments and create viable developments. And we certainly think at Azuri we've got a very successful project on our hands.
I mean, with regards to the actual regulation that is on the ground, it seems that it's very lax. Would you say that it is very relaxed?
No, certainly having to work in the environment every day, I don't think the regulation's terribly relaxed.
Well, tell us about some
what
of the challenges then that you experience.
Well, challenges I think in Mauritius are the fact that it is 4 hours from Africa, and we do have to work very hard to build market demand. It is 12 hours from Europe, and again, that's a specific, very niche market you have to work to. So the challenges, I think, are market size in Mauritius. But you do have a paradise island, you have a very friendly population, you've got great taxation benefits for people who come to Mauritius. So for us at IREC as a company, the challenges really are about making sure that we get the message out to the public and the investors that Mauritius is a great place to invest.
Well, the Nigeria Bankers Committee met to discuss a range of issues relating to the banking sector, including the adoption of the International Financial Reporting Standard by the banking sector and the ongoing pilot scheme to entrench a cashless economy in Nigeria. Wale Famurewa caught up with Central Bank Governor Sanusi Lamido Sanusi.
A number of banks already have been ahead as far as IFRS was concerned. I mean, banks that have, for instance, gone to the international markets to raise capital have had to work on IFRS. Banks that have subsidiaries in Europe have had to work on IFRS. And many of these systemically important banks have had some kind of exposure through their international activity to this. The real challenges has been actual documentation implementation. So, for example, the classification of these portfolios and the records of keeping and the rules around tainting of a portfolio, the threshold beyond which it is tainted. These are issues that needed clarity and consistency. So we needed to work as an industry, the regulator and the banks, to arrive at what is going to apply going forward based on what IFRS says and based on what we see in other regulatory environments. So that is what has been broadly agreed. Obviously, it will now come to the Central Bank and NDIC, and we'll look at it, and we'll come out with final guidelines.
But on the rollout, on the takeoff date, what's the update on that? We know that it's supposed to take off this year.
Well, it is taking off this year. Certainly, we all accounts prepared for 2012 will have to be based on IFRS and IFRS compliant. And remember, the workshop yesterday included banks. It brought in DMO. It brought in auditors as well. And whatever we decide finally, we'll still have to go to the Financial Reporting Council, which is really the one that has the authority to set accounting standards, so that we know exactly what in IFRS is being adopted wholesale and what we are adapting and what timelines we have.
Well, the final point on IFRS, there is some concern about bond portfolios. It's been discussed for a while now. How concerned should investors be about the impact that mark-to-market losses, for instance, could have on performances that will be reported this year?
Well, the numbers I've seen have been crazy, and I don't think they have been. The people who are writing those numbers understand that when you hold to maturity, you don't mark-to-market. So a lot of those bonds on the books of banks are held to maturity bonds. A very small fraction, really, has been held for trade. And part of what we'll work on is give the banks a grace period. I remember that even under IAS 39, they were supposed to mark to market, but during the crisis, the central banks really did not impose that strictly. So what we want to do is from March this year, when accounts are published, we would like to see what the final classification is and then apply the rules going forward. There are a few issues like the available for sale, for example. Do you keep hitting your capital account every time there's a movement in price? Because movements in capital have implications for single obligor limit, they have implications for capital adequacy ratio, and if there are things that just fluctuate on a day-to-day basis, do you really want to have that level of volatility in your capital? So those are the kinds of things that were discussed. And then what is the holding period for AFS? What is the holding period for held to maturity? What's the holding period for, what is the turnover period for what is in the trading portfolio, and so on.
Final point on the Cashless Lagos project, if you like. It's a pilot project for the cashless economy project that should be more nationwide. Give us an update on that. To some extent, there is a feeling that the public perception of that move is still somewhat negative in terms of the cost to the users, to bank customers, for instance.
I don't think we get that sense. I think it's more the need to communicate further. It's also the need to fast-track the rollout. We have rolled out 16,200 POS terminals. We're supposed to be at 40,000. We've just agreed, and we know the specific banks that have shortfalls, and we're going to, by March 31, have about 45,000 POS terminals. The real question is, do you restrict? We're going to have them in merchants. We're going to have them with the hospitals. We're going to have them with the schools. Now, the cost of taking out the cash is high, but we don't think that is a problem. There are complaints about the cost of depositing cash, which we'll look at. But there will have to be a cost, because if you don't have a cost for bringing in too much cash, then you don't have an incentive for asking your customers to pay with cards. So these are the kinds of things that, again, they were discussed. The feedback from the market, the experience so far. How do you improve on it? The greatest risk that cashless Lagos or cashless Nigeria would face is really not a cost risk. Okay, it's a risk on, do the telecoms companies provide the network that's available? Do the banks make sure they have a transparent process of applying charges? If there's a fraud, is there a very quick turnaround time for addressing the fraud? Do our own staff who might think their jobs are threatened, if people stop coming to the banking halls, do they properly market and explain these to customers? So a lot of those risks are within the control of the industry itself, and that's what we're looking at. Consumer protection in particular, against arbitrary charges, against fraud, okay, and very speedy turnaround, and also working with parties that are not banks, like telecoms companies and PTSPs, to make sure that they do not produce weak points in the chain.